Hey everyone, welcome back to Corporate Decoder, the place where we decode the financial secrets that move the markets. Today we're diving headfirst into a filing from Armada Hoffler Properties Inc. And let's just say they've been busy securing some serious funding. It sounds like they're making some pretty big moves in the private placement world. So what exactly is going on with Armada Hoffler Properties Inc. as of July 22, 2025? Well, it seems like the company and its main operating arm, Armada Hoffler LP, have been busy making deals. They've entered into a note purchase agreement, which is basically a fancy way of saying they're selling what are called senior unsecured notes to some investors. Think of it as them borrowing a chunk of money without offering any specific collateral like property or equipment backing it up. This private placement means they're selling these notes directly to a select group of investors, not to the general public on a stock exchange. It's a way to raise capital, often with more flexibility than a public offering. The total amount they're raising here is a cool $115 million. This $115 million is broken down into three different series of notes. You got $25 million in Series A notes with a 5.57% interest rate due in 2028. Then there's $45 million in Series B notes at 5.78% interest due in 2030. And finally, another $45 million in Series C notes with a 6.09% interest rate maturing in 2032. The price they're getting for these notes is exactly what they're worth, so no discounts or premiums there. Now, what's important about these notes is that they are unsecured. This means that if something were to go wrong, the investors who bought these notes wouldn't have a specific asset of the company that they could automatically claim to get their money back from. They're basically relying on the overall creditworthiness and financial health of Armada Hoffler LP, which is backed by the parent company Armada Hoffler Properties Inc. It also says here that these new notes are on equal footing, meaning they're treated the same as other unsecured debts the company might have. Armada Hoffler has the option to pay back these notes early. If they decide to do that, they have to give notice to the investors and they can pay back all or just a part of the notes. But here's the kicker. If they prepay early, they have to pay back the principal amount plus something called a make-whole amount. This is basically an extra payment to compensate the investors for the interest they would have earned if the note had stayed active until its original due date. It's a common feature in these types of agreements to protect investors from losing future interest income. To make these notes more appealing and secure for the investors, the parent company, Armada Hoffler Properties Inc., along with some of its subsidiaries, are providing what are called guarantees. This means that if the operating partnership can't pay back the notes, the parent company and these specific subsidiaries are on the hook to make the payments. This provides an extra layer of security for the note holders. The agreement itself includes standard clauses like what are called representations and warranties, which are essentially promises and declarations from Armada Hoffler about its business and its financial standing. There are also affirmative and negative covenants of things Armada Hoffler promises to do, like providing regular financial reports, while negative covenants are things they promise not to do, like taking on too much debt without permission. And these covenants are pretty similar to what you'd find in their existing credit agreements. They're big on maintaining financial health, which you can see from the types of financial covenants they're agreeing to. These include things like keeping their debt levels in check, a certain ratio of earnings to interest payments, a minimum amount of unencumbered assets, meaning assets not already pledged as collateral, and caps on things like how full their properties are and how much of their income comes from any single tenant. These are all designed to ensure the company remains financially strong and can meet its obligations. As with any loan or debt agreement, there are also included certain events that would be considered defaults, things that would cause the company to be in breach of the agreement. These are pretty standard stuff like not making payments on time, breaking any of the agreed upon rules, defaulting on other loans, going bankrupt, or having major legal judgments against them. Even certain events related to employee retirement plans or a failure of a guarantee can trigger a default. If any of these happen, the investors could demand immediate repayment of the notes. So what are they doing with all this money? They plan to use the net proceeds from selling these notes to pay off some of their existing debts and for general business needs. This indicates a strategy of refinancing or managing their debt portfolio, perhaps to get better terms or extend their repayment timelines. It's also worth noting that these notes weren't registered with the securities regulators under the main securities law. They're relying on an exemption which is typically used for private offerings to sophisticated investors who are presumed to be able to assess the risks themselves. To let everyone know about this big financial move Armada Hoffler Properties Inc. also issued a press release on the same day, July 22nd, announcing the successful closing of this private placement of notes. Looking at the exhibits filed with this report, we can see the actual note purchase agreement itself, which outlines all the nitty-gritty details of this deal. And who's the person signing off on this to make it official? Well, it's Matthew Barnes-Smith, the Chief Financial Officer, Treasurer, and Corporate Secretary of Armada Hoffler Properties Inc. That's a lot of hats to wear, but it shows the importance of this financial transaction. So what's my take on all this? Armada Hoffler is clearly actively managing its debt and using private placements to secure significant funding. The rates they're paying are not outrageously high, and the due diligence in the covenants suggests they're focused on maintaining financial stability. The use of proceeds to pay down existing debt and for general corporate purposes is a common and generally prudent strategy. This shows a company that is not afraid to make strategic financial moves to support its operations and growth. The guarantees from the parent company and subsidiaries also signal confidence from management in their ability to meet these new obligations. The risks are mainly tied to the general economic conditions and the real estate market which they are exposed to as a property company. However, their focus on specific financial ratios in the covenants suggests they are proactively managing these risks. Ultimately, this filing shows a mature company proactively managing its financial structure. What do you think about Armada Hoffler's recent funding activities? Did they secure a good deal? Let me know your thoughts in the comments below. If you found this breakdown valuable, give us a thumbs up and subscribe for more deconstructions of corporate finance. Don't forget to join our Discord community linked in the description for more in-depth discussions. Thanks for watching, and we'll see you in the next one.